Hello everyone and welcome to today's major markets update for Wednesday, January 4th, 2023, not 22, but 23. It's always the beginning of the year when you forget to update the actual year when you write the date. At least I do. Anyway, the first video for this year, so I hope you enjoy it. And please remember, here is the bottom line, all right? The market continues to chop around in the same range over the past few weeks, especially the Dow Jones. It's been stuck in a less than 2.5% range since essentially December 15th, soon 3 weeks. I cannot make the market. The market does what it does. It doesn't owe us anything. That's very unfortunate. But we have some decent price levels to watch to know what the next move will be. I'm starting to smell and prefer a leading diagonal first wave of the wave C of the larger wave B to 4,300 as the market moves now in the way I think it should move. So meanwhile, here are some trading tips or approaches one can apply. If you're more conservative or intermediate trader, I would say one can wait and see, to wait for this development of a full 5 waves up of the December 22 low. Then we need to see a corrective retrace and of course a breakout. So you can either buy the retrace, a little more aggressive, or wait for the breakout. Either way. Until then, this market will likely continue to be, I would say, treacherous for only but the nimblest of traders. This is green is gone. Okay, as soon as you enter a trade, you're up 1 or 2%. I would sell it from a quick gain perspective. That's how I've been approaching the market myself. It's been working wonders, and I'll probably incur a loss somewhere down the road because we cannot win everything, but that's fine. So keep those losses small, and for now, remember, this is still a treacherous market. So I would say the preferred narrative is here for a leading diagonal. Diagonals are extremely difficult to track and trade due to their overlapping nature, with not much rhyme or reason, not too many rules that must be adhered because of the overlap. The ABCs, including 535s, 535353s, etc. So that's why we're in this chop zone, because of overlap. But in general, we're moving higher, okay? So please keep that in mind. Why are we moving higher? Because this Santa Claus rally has provided us with a whopping 0.2% increase since it started, from closing price to closing price. It started on December 23rd. It are the 5 last trading days of the year, plus the first 2 trading days of the new year. So we got 0.2%. Not too much, but it is what it is. Why are we not seeing much gains? Because we're below the 20, below the 50, below the 200-day, and inside Ichimoku cloud. All right, that is not a setup for a strong trend. Strong trends occur when we're below these moving averages and cloud, or above them, okay? Especially if you're above the 200-day, it is a raging bull market that needs to be considered that way until proven otherwise. Now we're below these critical moving averages and haven't produced much upside. That is just the setup we're in. And please remember that yesterday, I can actually probably pull up the chart from yesterday. Here we go. Yesterday, I think we were looking for a B wave high, not this one, here to about, I think we were looking here potentially for about 38.60. This was the A, the B, and the C for this expanding leading diagonal. Very, very tricky, rare patterns, but because it's rare doesn't mean it won't happen. So today we then got to as high as, let's see, 38.73. If we see a breakdown below today's low, then I think we're in wave C to about 38.10, 38.20 before we see wave 5. Today's close is quite inconclusive. I would say that's my preferred path. The alternative is that we already bottomed for wave 4, which is quite fast, I must admit, but on the other hand, wave 2 was quite fast as well. And if we break above today's high, and of course, especially this week's high so far, which are very close, about 38.80 zone, then we have a wave C on our way to about 39.10, potentially 39.50. The ideal would be about 39.20 for this 1, 2, 3, 4, 5. And a very bullish count has us only in wave C of 3, a 4, and a 5. Okay, but even that one points here to a rally to about 39.20, 39.40, similar as we see here between 39.10 and a little bit higher, 39.55. And then we should see a drop back to about current levels before we see another rally for this wave 1, a large drop to the beginning of the diagonal, which is again the 3800s. The same here, if we top here at about 39.20, we should see a drop to the beginning, which is about 3800s, ideally, before we start wave 3. Okay, so we're really not out of the woods. This chop is going to last quite a lot longer than most would like to see. It doesn't really surprise me either, because this chop will then scare most people out of the market and will keep them out of the market until we are, of course, approaching the new highs. Alternative now is for this wave 4 having completed at the spike high, I believe that was yesterday, and we have a 1 and a 2, and of course we cannot go above this spike high here, because then we have a wave 2 surpassing the start of wave 1, and that's not allowed in Elliott Wave. So it's getting close to invalidation. If we see continued upside, then this preferred ending or leading diagonal is underway with either the 3, the 4, and the 5, or already in 5. We'll know soon enough. We break above today's high, and especially, of course, above this week's high, about 38.80. Then I'm going to look here for about 39.20. Okay, if we break below today's low, then I'm going to look here for about 38.20, and then we rally. So either way, we bottom here and then we rally, or we're going to rally instantly and then we drop pretty much back to current levels or below it, about 3800. Similarly, for this wave count, we break higher, then that would be C of 3, 4, and 5. Why? Because 3 should be about 123.6 times the length of 1 measured from 2, etc. Wave 5 reaches then 161.8. To be determined, but you can see here that once 1 completes, also this one has us drop back to about 3800. Even here, when we bottom or top at around 39.20, we still see about a 60 to 70 point decline before we rally again. So here we will see a, I would say, almost 100 point decline. So either way, if we break out and rally, please know what the next move after that is going to be from a shorter term perspective. If we drop here to 3800, break above the high, then I am going to favor, of course, that we already are in 3 of C. Because bigger picture wise, let me show you that. Sorry, the stock chart's hanging up here, is of course the fact that I still prefer us to be in this C wave of wave B to the 4300s. I'll zoom out a little bit so you can see it a little bit better there. So we should be in this 1, and then we get the 2, and then the 3, etc. Okay, so this is now turning into a sloppy diagonal red wave 1. We start off, of course, with a regular non-overlapping standard Fibonacci-based impulse red wave 1. That is our initial framework. And then we monitor, that's the anticipation. Then we monitor to see if we get it. If we don't get it, then we know we're either with a leading regular diagonal or we are in a expanding diagonal, okay? But so far, we're still slightly moving higher, but we have our parameters in place. And if we break below the recent lows we made, then I'm going to look here for the 3600s. That potential is still in the charts. Okay, so we need to hold the recent lows. We need to hold yesterday's low. We need to hold last week's low. We need to hold the low before that. That remains the same. Because of the sideways nature of the market, we need to respect those lows. If we don't respect those lows, we'll see 3600s. Same here for the Dow Jones. We haven't gotten anywhere since December 15th. Still now, no breakout. When we see the breakout, then it will be a little bit easier for us to assess that we are in this gray potential wave 3. You see a breakdown below 32,600. We are in green wave 5. I cannot make it any clearer than this, with of course warning signs already below this week's lows. Let me put that in the chart here for you, right there at about 32,860. I would say that is a warning, because then we cannot have subdivisions higher, but we start to subdivide lower. Okay, so that's the warning level, that's the support. We must hold and respect those levels going forward, not we, but the market. NASDAQ 100, I cannot say anything about it. This looks like it wants to trend higher, but I have no bias towards anything on this index. This just looks like a disastrous mess of the last 2 weeks. I cannot say too much about it, unfortunately. That's just the way it is. So we have our parameters for the S&P 500. Let's watch those. The Dow Jones as well, because it's been going sideways. We definitely want to hold the recent lows that we made, of course, this week, the last week as well. If not, then we're going to tumble much lower. That potential is still in the charts. So again, this is only useful trading for the nimblest of traders. Moving on to, I would say, our fantastic, great longer-term opportunity, Tesla. We do now have, of course, positive divergence in place, and we could now have bottomed for 3 in gray or green 3, and we're now bouncing. And then we should bounce back to about 140 plus or minus 10 before we see our final decline. So either we're going to do one more setup of 4 and 5 waves, or only one. That is pretty much what I'm looking for. And maybe once Tesla is done, that is when the market finally has enough mojo to start rallying. We'll see, but for now, this looks pretty good. I still expect at least, and at the minimum, one more set of 4 and 5 waves. Looking at the bullish percent index for the regular NASDAQ, we still have a boatload of positive divergence, meaning we've been going lower and lower, but more and more stocks are in a bullish setup. At the lows here in early 2022, we were at about 20, and now we're at the low 30s. Meanwhile, prices come lower. So that is bullish, but divergence is only divergence till it's not. Please note that in this current environment, we've had much lower readings than we've seen for the entire rally since the 2009 low, meaning not absolute lows, but staying longer in this low region. But we have the positive divergence. So that one starts to suggest a rally could occur at any moment, which would fit with the Elliott Wave Count. These are the new lows. They're benign now. We're at 15. We'll change in a couple of hours, but it's at 15. It has been below 50 since yesterday, 36. NASDAQ was still a little bit too high. Could be just borderline 37 once all data is available, but this looks good. So this is a good sign of potentially more upside. We need to see very few new 52-week lows to allow for a nice rally, just like we saw here, right? Everything should be around, maybe 10, 20, something around there. So that's good. We're moving the right direction. Too high levels means continued downside. Let's have a look at the McClellan oscillator. Also here, of course, with this whole sideways mess, the market has been steadily improving with similar prices, I would say, over the last 2 weeks, but increasing market breadth. This is the McClellan oscillator of the S&P 500. It measures the number of issues on the S&P 500 that changed either direction, up or down, and then you subtract it, and a positive number means more stocks advancing, bulls are in charge, and a negative number means more stocks declining, bears are in charge. We're now in positive territory, and it looks like this index, which adds yesterday's reading to that of the day before that and the day before that, is now starting to curl back up. We get a buy signal when we have positive market strength. We get a sell signal once we eventually have negative market strength. So this one is starting to turn up. No buy signal yet, but it starts to support also a completion of the correction and that we might now finally see the either 3 of 1 or 5 of 1. How we're doing our PMO buy all sell all indicator, I have no data for today yet. It's going to take a couple of hours, but as you can see, we are at the absolute minimum at 0. We've been there for quite a long time, so the risk to the downside in general is now smaller than the potential to the upside. So also this indicator is in the bottom zone for quite a while. Can stay there for much longer, as we can see here, all through September and all through May. But those are more rare occasions during very strong C waves. That seems not to be the case considering where we are in the wave count, in that we could be in this first wave higher, potentially one leg lower, and that's about it to the 37,3600 region on the S&P 500. And then we rally. So again, that's still the question, right? Are we going to drop to 3700, 3600 first? Or we continue to rally in this overlapping leading diagonal. Sorry. So the overlapping leading diagonal is the preferred path. Okay. Why? Because yesterday I was looking here for a rally to about 3860. We got 3873-ish, and then we dropped. So that is working its way quite nicely. Drop below today's lows, and then I'm going to look here for a bottom from 4 and then 5. And if we break higher, then I'm going to look here for this wave 5 to about 3920 plus or minus 20. Alternatively, we're only then in 3, and then we see a 4 and a 5 potentially. I don't like this wave 1 high here too much, but it is what it is if this is the case. Right? Either way, if we get to about 3920, 3940, we would see a substantial pullback before we see the next rally. And alternatively, if we break below the lows from yesterday, last week, and the week before that, we're going to head to the 3600s. So please know your risk versus your reward here. Tight stop, green is gone. So far, then this is the 1, the 2, the 3, the 4, and the 5. This has been the preferred path, with, of course, the potential for topping out at 3960. And if we then drop, of course, below 38 or 3775, we're going to go much, much lower. That is, for now, not the preferred path. I just wanted to point you out these potentials. Okay, please be aware of it. Dow Jones range bound, can't say too much about it. If we break higher tomorrow or the day before, after tomorrow, whenever we're going to get there, that'd be bullish, period. If we break higher, then we have a nice symmetry target of around 34,250. Simple symmetry would target that. And then I think we'll be looking for a 1, 2, 3, 4, 5 setup for Dow Jones. Nasdaq 100, I can't say too much about it. It's just the way it is. Same for the semiconductors and the small caps, too overlapping to make any clear educated guesses, because that's of course what we're doing, using the tools available. Tesla, I like to see a 3 completion here, a 4 and a 5 at the minimum, potentially 4, 5, 4, 5 setup to get cracking positive divergence, and then our bull run to 560. So massive opportunities down the road. Market breadth quite washed out, starting to turn around. So I can't stress it often enough. Please know where we are in the market. The market's been range bound for the past few weeks. So we do now have decent price levels to watch. We want to hold yesterday's low, last week's low, and the low before that. December 22 low is of course the very line in the sand. Otherwise we'll revisit 3600 region. Can break above today's high and yesterday's high. We're going to go to 3920 plus or minus 20, and then we'll see the next pullback, in my humble opinion. Meanwhile, here are some trading tips, approaches one can apply. Do whatever you want to do. There are many techniques out there. This is one of them. I just like to give that suggestion. Just wait and see to us either get full 5 up, buy the pullback, or wait for that and then buy the breakout. Use appropriate stops, all that good stuff. All right. Until then, this market is continuing to be a treacherous environment, and only the nimblest of traders should, my own opinion, be in it. Green is gone, 1-2% up. I would sell it, be happy with it. All right. Whatever your gains are, maybe use options and you think 1 or 2% is child's play. Anyway, all good. Thank you so much for listening. Thank you so much for being a valued premium member. I think this year is going to be fantastic. Looks like we're getting that diagonal going. Hopefully we get the breakout, because once we have the diagonal on the map, we know what to look for, a pullback and then a breakout. And then our intermediate to long-term path has been validated, meaning towards 4,300 and big crash, all the way back up, big crash, etc. You know, the big picture count that I have on the charts for quite some time, which is of course here, right? Rally, crash, rally, crash. But that's still very, very far out. We still need to figure out if this black wave B has bottomed, yes or no. I think it has. That's my preferred point of view. Take care, trade safe. See you all on Friday. Bye.